and hit that like button when you come into the live stream. The YouTube algorithm will pick up the video and spread it around for more people to join in. It always makes that comment section a lot more fun when we have more people joining in on the live stream. In today's video, we're going to be talking about how the Federal Reserve won't cut rates. They're not planning on cutting rates anytime in the future. So long, here, let me get this up so the helicopter doesn't pass that a little bit. All right. But the Federal Reserve won't cut rates until you are feeling the pain and suffering and misery of what it is that would actually bring inflation down. Now, so many people have this confused, and it's understandably why. The Federal Reserve has changed the way that they are conducting themselves, yet nobody knows that they have changed the way that they conduct themselves. And because nobody knows that they have changed the way that they conduct themselves, people are still anticipating the Federal Reserve to make interest rate cuts in order to stimulate the economy or to even restrict the economy. But that system has failed. However, since nobody knows it, the idea of interest rate cuts coming into the future or even interest rate hikes is what truly impacts the economy. The idea of it, right? Go and take a look at the article I leave. I think it's the first link that I left in the description. Go down to the very last comment given by a former Fed official talking about what happens when Jerome Powell comes out and says an idea about cutting rates into the future, how the markets react to that, actually driving stimulus into the economy, preventing the Federal Reserve from actually cutting rates. This is what the gentleman said. Like, the credible threat alone is enough to stimulate the economy. This is what I've been trying to explain for months now, that the Federal Reserve has run out of monetary policy in the traditional sense. Adjustment of interest rates no longer does what people would anticipate it does. However, since nobody knows that it doesn't work anymore, the idea of it, the perception, the future expectations of interest rate cuts does stimulate the economy. It actually gets people to behave in a way that starts creating the effect as if the Federal Reserve had cut rates. And I know this is something that I have gone over so many times in the past, but I just gotta keep reiterating this stuff because I see it so prevalent throughout the mainstream media, throughout the, comment section. Even, I've had people even just today come and ask me, it was like, what's the Federal Reserve, when's the Fed gonna cut? And I'm thinking to myself, wow, it is still so apparent that people have no idea that the Federal Reserve had lost control, that they still believe that the interest rate cuts are going to do something. And I mean, it's just like, I can't state it any other way. Why? Why is this the case? Why is it that the Federal Reserve's interest rate adjustments no longer works? Not that anybody knows it, but why is it that it's failed? And it has to come down to the neutral interest rate. Again, another rate that nobody talks about. Very rarely can you find any news article or any other economist out there referring to the neutral interest rate or the natural interest rate, as a lot of times you will see it referred to in the Federal Reserve documents. This neutral interest rate is the interest rate that is neither accommodating nor restricting the economy. It's neutral. And this neutral interest rate has fallen dramatically over the last 25 years, and even now is so close to zero that lowering interest rates at the Fed funds level far enough below neutral is no longer an effective tool because they hit the lower bound of zero. Zero interest rates at the lower or with a low neutral interest rate has very little stimulative impact to the economy. Nobody knows this. Very few people can articulate this idea out there of what happened to the Federal Reserve's monetary policy a few years ago. It became ineffective. It didn't work anymore. When I heard Donald Trump talking about how the Fed should be lowering interest rates and running into negative territory and printing cash, and then I hear about how the Federal Reserve kept interest rates too long or too low too long, creating the inflationary pressures that we are experiencing, and now even today the Federal Reserve creating undue damage to the economy, creating this painful experience for people, and yet nobody realizes that those interest rate adjustments have very little impact on the economy. Very little. See, the idea does. The idea has a major impact on the economy, and they figured this out a long time ago. See, they knew the neutral interest rate becoming close to zero made the monetary policy of interest rates adjustments ineffective, because when you reach the lower bound of zero on the Fed funds rate, it is actually a deflationary experience. See, people don't realize it. They think, okay, the Fed funds rate's at zero. That means it's very stimulative. That means there's a lot of opportunity to borrow money going out there into the future. And by borrowing this money, you can drive up the asset prices. And this is an inflationary experience. Like, low interest rates creates inflation, right? But now you think about it from a return on capital investment. Think about it differently for just a minute. If you have a return on capital investment that is very low because of the low interest rates, that means by the time you have returned your principal payments plus the interest, that purchasing power is no longer as powerful as when you had made the original investment. You have lost purchasing power over time due to the very low return on capital investment and the fact that it doesn't beat inflation. Low interest rates is a deflationary force. People don't realize this. They look at the economy right now and they say, man, why is it running so strong? And not realizing that the return on capital investment is actually paying them a decent return. Is it as good as it once was? Not even, but is it as good than it has been just recently? Absolutely. Way better than it has been. And now as the inflation expectation runs persistent going into the future, this ends up driving up interest rates, including that neutral interest rate. See, the longer we keep that inflation expectation running extra hot, extra long for an extended period of time, the farther it will drive the neutral interest rate ever closer to the Fed funds rate that is standing still. This neutral interest rate that begins to rise because of the higher inflation expectation that makes it ever increasingly closer to the Fed funds rate actually becomes less restrictive to the economy. People again wonder, why is it that the economy is doing as well as it is? See, this is the real facts of the situation. The Federal Reserve is not trying to do what a lot of people are anticipating them doing. They're not raising the interest rates to try and bring inflation down. They raised the interest rates to try and get the inflation expectation elevated. They didn't raise the inflation or the interest rates to create the inflation expectation. The inflation expectation being elevated gives them the ability to keep the interest rates elevated. That's what's really happening here. And so long as they can keep that inflation expectation elevated, they can keep those interest rates elevated, and they can get the neutral interest rate to continue to rise. The more they get that neutral interest rate to rise, that is them getting their ammo back. But it takes time, and the people need to suffer in pain. They need to feel the experience of a slowing economy, of layoffs, of no wage growth, of higher grocery costs. They need to experience all these things in order to raise the neutral interest rate. The Fed wants you suffering in pain. They need that experience from you in order to get that neutral interest rate back, in order to acquire the ammo they need in order to continue on functioning in the traditional sense in which people would expect them to. But since that doesn't work anymore, it's all down to their words and how much they can use their words to adjust the monetary policy within the perceptions of the people itself, because the interest rate adjustments don't work. So if they can have you convinced that they are going to be raising interest rates in the future or cutting interest rates in the future, or even better yet, have no clue of what it is that they plan on doing in the future, and that way they can keep it open-ended. And if they do need to stimulate the economy or restrict the economy, they can put out the forward guidance, the signaling of the direction in which that they feel that they need to move. Think about the testing that they did to this very concept. This has happened over the last 6 months. Go back to the end of the year and think about that plot, that dot plot. 7 interest rate cuts guaranteed, right, this year. How many people were under that impression out there? That was the Federal Reserve's communication, putting it out there, trying to stimulate the economy. By putting out that forward guidance, that's signaling that idea that they may be cutting rates going into the future, and then using this dot plot, which is not forward, is not any kind of guarantee. right? It was them giving an opinion. But yet people took it for reality of the situation, and they believed that the Federal Reserve was going to be cutting rates up to 7 times. They took that information for reality and started behaving as if those interest rate cuts had already happened. You could see it happening within the mortgage market itself. This was a test of the Federal Reserve System on how it is that they conduct their monetary policy. It's not the interest rate adjustments, it's the idea of it. And it totally works. And if you can see it for what it is, then you can recognize it through their communications. You can recognize it through their press statements. You can recognize it through that dot plot. Like all the times that I've heard people tell me what it is that the Federal Reserve is planning on doing, nobody has ever come to me and said, dude, I think that they're going to keep the interest rates elevated for a significant amount of time, making sure that the inflation expectation also stays elevated so that they can raise the neutral interest rate to gain their ammo back, considering that the Fed funds rate cannot fall far enough below the neutral interest rate before hitting the lower bound of 0. Nobody comes to me and tells me that, right? I'm the only one. And now I do express and try to communicate this to you because I feel that this is truly the information that you need to know in order to understand what it is that you need to do with yourself, your portfolios, your business, your retirement, your investments, right? This is the information you need. All those other people who are telling you the Federal Reserve is lying, that inflation's way up here, but it's, they're saying it's here, but it's way up here. Who cares? Right? Who cares where inflation really is? It's all painful no matter what it truly is, right? Why? Why is the Federal Reserve doing this? Right? And it's because of the failure of their monetary policy. See, they could be out the game. They could be like, well, we're done, guys. You're on your own. Go figure it out. Start trading gold or something. You're all going to be limited in your transactions. You're not going to live a higher standard of living. There's certainly not going to be any more foreign imports coming in. And as far as your exports, nobody's going to want your stuff either because nobody's using the dollar anymore. Now, I don't know what kind of life that's going to be like, but I'm sure most people probably wouldn't want to experience that. Right? So here the Federal Reserve is doing their best to try and self-preserve, maintain their capabilities of adjusting monetary policy in a way that is actually effective into the economy. Nobody knows it. Nobody knows how they're doing this or why they're doing it. Like they have misunderstood it, misbelieve it, or just come up with other ideas of what it is that they feel that the Federal Reserve is truly up to. But that's it. Right? That is, I can't explain it any other way. If you want to believe that they are doing it because rich men want to have you suffer in pain because they want to take all your efforts and concentrate it into the hands of just a few, yeah, that's happening too. That's a good way to explain it, I guess. Sure. If that's the way you want to go with it, I look at it much differently. I need to position myself with this information so that I can do better for myself going into the future. Most people do not see this information for what it is. They want to blame, they want to, accuse and all kinds of stuff, and then come up with these wild ideas on what it is that the Federal Reserve is up to. This is it, right? This is it. It's the neutral interest rate. It was far too low. They ran out of monetary policy. They realized this years ago. They started setting up the communication tools in order to conduct themselves in a fashion in which that it's the expectations that are coming from them that is more of the monetary policy than the interest rate adjustments themselves. Because they know it. They knew that you can see it pretty much plain as day when it came to the historically low unemployment that we have been experiencing over the last pretty much decade now, or going on a decade. But this incredibly low unemployment that we have experienced over these last few years, especially the last 5, 6, 7 years, would typically create an inflationary scenario that would have the Federal Reserve getting exactly what they were anticipating by the low interest rates. It did not work. And I know people are going to argue the idea that inflation is running much higher than what the Federal Reserve is stating. I agree. The numbers are lies. They are fakes. It's not real. It's not reality, not even in any way you look at it. Doesn't matter because we don't conduct monetary policy. If we are to understand how monetary policy is going to work, we have to understand what it is that the people who are in control or who are voting on monetary policy, what it is that they are looking at. It doesn't matter. We can want them to look at different numbers. We can ask them to look at different numbers. We can hope and pray and wish that they would look at different numbers. They don't. They look at the numbers, right? They look at their numbers. And if we do not take that into consideration, there is no way that we are going to know what it is that they plan on doing with their monetary policy. Like, I mean, it ain't up to me, right? I mean, I have ideas on what we could do, how to fix it, how to, whatever. I mean, I don't have any idea on how to fix it, but I have my own ideas. It doesn't matter what my ideas are. It doesn't matter what my opinion is or any of that, right? What matters is what it is that the Federal Reserve is doing with the information that they are gathering in order to conduct their monetary policy. We have to look at it like that, right? And that way we can then position ourselves accordingly to that monetary policy decisions that will be being made. All right. I've just babbled off hard here. Okay, we got 262 people watching with 59 likes. Go hit that like button, and we'll see if we can get through some comments here. I got a little bit of time here. I got about 15, 20 minutes. All right, yeah, if you're waiting on the Fed to cut rates, you're going to be disappointed. You very much, David. I totally agree. Yeah, caught alive right on Late Start Wealth. Appreciate you being here, man. Hey, I love listening to you. Well, thank you, David. I appreciate you being here. All right. Brody, that's it, Davids. Thank you so much for being here, Brody. Deja Vu says afternoons. Well, good afternoon, Deja. All right. Hey, just for a hint, when you came on, you were already cut off by a few sentences. Oh, yeah. Sometimes I have to wait just a minute for the live stream to kick in, and it doesn't really tell me when it's actually, connected. So, yeah. I should wait just a few minutes before I start talking. All right, greetings, everyone. Should I buy lumber for my basement now or wait? I would not wait. I would buy lumber now. This is about as cheap as it's going to get. Could it go down further? Sure, but we're at 500 per thousand right now. Mills are in massive curtailments. They are pulling back on inventory. They do not like producing at this low level. That should be a sign that lumber is cheap as it is right now. Get into it. If you have a project this summer, buy it. Right, but if you have no idea, your project's in a year from now or something like that, I don't know if necessarily now is the time, but definitely if you have a project this summer. Okay, hey Simon, you were talking about negative interest rates coming yesterday. Do you see? I don't believe negative interest rates are going to be coming until we see a digital currency of some sort, like a central bank digital currency, or what's probably going to more likely be a stable coin, regulations for that, and then the withdrawal of cash. All this stuff has to happen kind of first before we will see the negative interest rates. But let me finish the question, I guess I should say. Powell world, or does it matter who's at the helm? Powell makes zero difference to the monetary policy. All right, we have to understand that what Powell does is communicate the FOMC. So there's 12 voting members of the FOMC. Powell is one of them. He has one vote, so he's a 12th, all right, of the vote. There is 5 alternates and 2, I believe, advisors or something like that. So there's 19 people to the FOMC. 12 of them are voting members. Powell is one of them. He is a messenger. He is a communicator of the FOMC. Nothing changes about monetary policy except for the one vote and the person who is communicating the language. That's it, right? Powell has no control over anything, right? This is something that I hope people understand, that Michelle Bowman is more influential on the FOMC than Powell is. Her information, her studies, her research, her speeches are far more influential to the FOMC than Powell. Same thing with John Williams. Even though they try to discredit him, he is incredibly influential to the FOMC, and the voting portion of the monetary policy is very much influenced by those two people, along with the rest of them out there. Right? But to think that Powell is in control, or that things will be any different with the monetary policy, whether or not he was there, it doesn't make any difference. What does make a difference is the way that it is communicated to you. So for very much like going to Taco Bell, like a lot of people have heard me refer to Taco Bell politics. It doesn't matter what you are ordering. You are going to get the same thing. It's the same chicken, it's the same beef, it's the same cheese, it's the same, everything. The only difference is the shape that it comes in. Do you want it soft or crunchy, spicy or mild, with or without sour cream? But it doesn't matter. All the filling is exactly the same stuff, just in different configurations. Right? Same thing, right? So the only difference that would come is the communication in which that you would receive it, but the information within it is going to be exactly the same no matter who you have in there. I hope they raise them more. I love earning 5 1/4 on my cash with 0 risk. And that's it, the return on capital investment. All right, let me cruise down here and find the super chat. Thank you so much for hitting me with the super chat. Enter the game, love the name. $4.99, great info as always. Are you going to do one-on-one consultations for those of us who have questions and need financial advice? Yes, that is actually something that I have very much considered, was doing consultation calls. Now, I've done a few of them in the past. Just somebody would email me and say, hey man, you got time for an hour-long conversation? I don't have necessarily a price that I would charge for that. However, I left it open to the people who have contacted me asking me for a consultation call. I left it open to them. I was like, here's my PayPal, Venmo, whatever, just, send me what you want. And they have always compensated me very well. And so I really love the idea of doing consultation calls. So if there is anybody who is interested in a consultation call, go ahead and email me. I will try and get through my emails. I apologize to anybody who has sent me an email over the last month or so. I have not been very active in getting my emails answered. It's because I've been overwhelmed with them. It just all of a sudden it just blew up, and I'm trying to get through them, and it's an excuse, and I apologize for that, but that's what's going on with it. But if you want a consultation call, email me, put it in the subject line of the email, and I will try and get make it back to you, get some contact back to you, and set up a time that we can have a consultation. Because I know a lot of people have questions about it. I try to reiterate this information a lot, but there's gaps. There's gaps of information that people need to be filled in to have that aha moment that finally is oh, that clears it up. I finally get it now. There was this one confusing thing that I needed to to finally understand. And I try to put as much of information I can out there, but really, this is such a complicated topic with so many inner working parts to it that if you don't understand how a bond works, then it makes it difficult to understand how the rest of this stuff is working. So sometimes it's just literally clearing up how a bond works that can all of a sudden open up all this other information that's been basically hiding in secret. All right, I got $200 in cash. Should I keep that or invest it in more silver? What do you think, gang? Candy stuffed corpse. Love the name. Hey, Dishes is up in the stream. Thank you for hitting that like button. Okay, Dishes. Sheldon, you must have a classy TB locally. All right. List yourself as a consultant under LLC. Huh, interesting. Alright. Going back to the $200 cash there, for me, $200 is, if that's all you have is the $200, then I would probably hold on to $200, right? Just the $200 cash, just because really, this is something that when I learned this was back when I just started getting on YouTube, and started making some revenue, and it wasn't very much at the time. I remember reading an article that less than 50% of Americans could come up with $400 in case of an emergency. And I thought, holy moly. Well, I don't want to be like 50% of Americans, so I went out and got $400 cash for each member of my family so that I wouldn't be in that statistic, right? So if you only have $200, then I would probably end up holding on to that, because really, like I said, that's not very much money. And I know to a lot of people that might be a lot of money, you know, especially if you live paycheck to paycheck and it's, you know, you don't earn a lot of cash or whatever. Like $200 is a lot. I remember one time my mom gave me $300, and I was during a time in which I was incredibly broke. And I've told this story before, but that $300 literally gave me the ability to sleep at night. It was like all of a sudden I didn't have to, like, I didn't stress about the electric bill or something like that. And it was just having three $100 bills was made all the difference in the world in just my, you know, my psyche. So again, now if you just happen to have, no, I mean, I won $200 at the poker game last night. Okay, so you got $200, you just want to, you know, just throw it at something. I would probably bust that up into silver and Bitcoin, and then probably into the stock market. That would be personally, right? I would do $50 into Bitcoin, $50 into silver, and then I would do another $100 into my stock portfolio. That would be me. But that's what I would do. All right. Simon, I think should avoid questions like that. Could be construed as financial advice. It can be, and it's not financial advice. That's why I always say that's what I would do with it. Now, it doesn't really matter. I'm not somebody who is a financial advisor. I'm not somebody who's even, you know, like under the idea that I would be giving financial advice, and nothing that I would express to a YouTube channel could ever really be considered financial advice, even if you were to say, hey man, I heard it on this guy at YouTube. Doesn't matter, right? Now, if I was trying to sell you the idea that I could give you financial advice, that would be different. Like, I don't do that. I'm not even trying to attempt to do that. I give consultations on economics, not financial, like positioning yourself, like where it is that you could put money and stuff like that. I have no clue. If you could figure that out, maybe you could call and let me know like what it is that I need to do. But until then, I have my ideas of where it is that I need to position myself. And for most part, I doubt anybody else is going to be doing those exact same things, because hell, nobody's in the same position I'm in, right? Nobody's going to be needing what I need, and I don't know what it is that you need. All right. Question. Canada and European central banks cut rates, so why won't the Fed cut its rates? It's because we're a world reserve currency, and it's a much different position than what the rest of those nations are up to. Now, if you follow Brent Johnson's milkshake theory, it starts to really make a lot of sense that when the other nations around the world start to devalue their currency, it makes our currency so much stronger. And then all of a sudden, our imports that are coming in, our purchases of foreign goods, become so much more accessible to the people here, right? So now our economy is starting to purchase those things and doing really well from the purchases of those foreign items. Now, I know a lot of times we look at our economy and saying that might be a bad thing, and I would agree on it, since the idea of purchasing foreign production is not healthy for American manufacturers or good quality American jobs. You're right, that's not helpful. However, we are not a manufacturing state, we are a consumption state, and by having these items coming into the United States that then starts being transacted actually creates business for the American people, because what we do is we buy foreign production and then sell it to each other. So that's actually going to be a benefit to the United States in the long run, not for our exports, not for our manufacturing, but just for our general economy, until eventually that wears out too. But in the short run, Americans will be able to travel and, you know, be able to have a cheaper traveling experience, you know, from having a stronger dollar and a weaker currencies from other people. And then again, like, I really honestly believe that the Federal Reserve is doing their very best to try and create a situation in which that the demand for their liabilities becomes less. And that doesn't work out too well for anybody. Like, even the idea of the BRICS nations, I think, is, even though it seems like it's this really, like, you know, almost like this combative like fighting thing between the two, like, you know, the Federal Reserve versus the BRICS, you know, kind of thing. However, if you really take a look at it from the back, from a further distance, right, and you kind of cloud out, you just kind of turn off the noise for just a minute, and you just kind of see what's happening, right? you have transactions that are taking place around the world. There is a limited amount of transactions that can take place if you have a limited amount of currency. So the Federal Reserve and the dollar itself is providing an abundance amount of currency in order to fulfill all the demand for transactions that occur out there. Now, if people were not going to use the dollar, they would have to find something else to use. Here's the problem. There's really nothing else to use. Even though there are other sovereign nations with currencies that can be used and might be accepted, like two nations doing deals with each other, it's still, they do not provide enough of it to fulfill all the demands for all the transactions. And in fact, the Federal Reserve has a hard time fulfilling all the need for dollars to fulfill all the demand for all the transactions that actually occur out there. The Federal Reserve has a hard time providing that. So these other people will use other currencies besides the dollar, even though they would much rather use the dollar. Now, what is it that the Federal Reserve is going to do, right? They need to provide the world with dollars, right? But they don't want to keep providing the world with dollars, because in order to do that, they have to force the United States into unsustainable debt, right? Because they need something to buy. This is a very difficult thing for the Federal Reserve to try and accomplish, is to fulfill the world fill the demand that the world has for the dollars to do transactions. Here comes the BRICS. Hey, we can alleviate some of that pain, right? But we can't do it symbiotically, like, hey man, we're all on this together. It has to be done in a fighting fashion, right? Because if it was a symbiotic thing, it would be good currency versus bad currency. Everybody would look at the BRICS and go like, yeah, piss off, man, we're not going to use that, we're going to use the dollars. But if the BRICS come up and say, oh, nah, we're strong, we hate the dollar, we don't want the dollar, we're a combat to the dollar, it's an alternative to the dollar, okay? All of a sudden, people can say, hey, we don't like the dollar, we don't want the dollar, we're going to use this other currency out here, and the dollar doesn't have to fulfill the role of fulfilling all the demand for transactions that are actually happening out there. See, nobody looks at it like that. Nobody sees it in that fashion. See, they wouldn't look at it like that because they wouldn't understand why it is that the dollar is being used for all the transactions around the world to begin with. Right? And it was because if you go back far enough, you're going to find where people were actually using the dollar in place of gold. They thought if they could come up with the $22 or $35 or whatever it was at the time, if they come up with that money, they would be able to get an ounce of gold. It was like, these two were like equal, right? If you had a certain amount of dollars, you would get a certain amount of gold. That gave the ability for the world to say, man, let's use dollars, because now we can do as many transactions as we want, and we can just take those dollars and trade them over for gold. Until one day everybody realized they couldn't do it anymore. Right? But the dollar never would have made it to that position if it wasn't for the world's demand to do transactions. They could care less if it was dollars or gold, they just wanted to be able to work. And that's it. I grow carrots. I want to be able to trade these carrots for goods and services out there. How the hell do I do that? You got to have a currency. And if there's not enough gold to do it, then I sit on a bunch of rotten carrots. However, if there's a flood of currency out there and all this fiat transactions that can happen out there, I can sell as many carrots as I want. Right? I can provide the world with carrots, and the world will provide me with money, and I can take that money and then go and exchange it for all the goods and services I want out there. Right? And this is what the dollar was doing out there because the people demanded it. They were like, man, I got a lot of carrots, I want to sell them. How do I do that? And they're like, trade it for gold. There isn't enough gold out there. And like, all the people who have gold don't want to buy all these carrots. And they're like, well, maybe we can set up a system in which that there's all the money in the world that you could use to sell and buy carrots with. Hey, that works out really well, except for, the separation between the rich and the poor and the concentration of wealth that takes place on account of it. But hey, at least you get to sell all your carrots. All right, let me see. There was another one over here. Let's take it up. Thank you so much, Amber, for the $5. All right, let me see how much time we got. Okay, I got a few more minutes left here, and we'll answer Amber's question here. You seem to promote BTC over ETH. Why? Bitcoin has some of the lowest developer activity out of the crypto, is very expensive to use, and other issues. Hey, I agree, Amber, and I agree with all that stuff you just stated, right? Here's the thing. There's nothing that all these other cryptocurrencies are doing that Bitcoin can't do or won't be able to do in the future, even if you consider a secondary layer system, all right? So now, when I think about what it is that this cryptocurrency thing really is, it's nothing. It's absolutely nothing. It's a communication. That's it. It's a communication between me and somebody else, if that's what you want to break it down to the essence of, right? Now, I don't need a zillion different forms of communication. I just need one, the best one, right? Now, I think about it. They know. They know how to hack Bitcoin, right? You got to take over 51% of the miners out there. There is no other currency out there that is going to match what it is that Bitcoin is doing, especially when it comes to the computing power that it would take to get over 51% of the miners. Like, it isn't happening. The security level of Bitcoin is off the charts. Now, that's what I look at. The communication of it works just swimmingly, and the security of it. Again, very difficult to try and hack Bitcoin and a 51% takeover, right? Not saying that you can do it with ETH. I'm just saying it's going to be much harder with Bitcoin. So because of those two reasons, and the fact that there's really nothing out there that these other currencies are doing that Bitcoin can't do or would be able to do in the future using a secondary system, it just leads me to believe that if you are going to pick one out, pick out the gold. It's cryptocurrencies, it's going to be Bitcoin, right? That's it. Now, I'm not saying that these other currencies or these other projects or programs or whatever don't have good use and I'm not trying to say that they won't be used in the future. I'm not going to say that either, right? Because a lot of these I believe will be used in the future, and it'll probably, may even move up on a percentage basis more than what Bitcoin can do. I'm looking at it with a very low expectation, right? If I had expectations on these other coins of performing better than Bitcoin, then that would have my expectations elevated. I don't do that. I keep them very low. I looked at it, I looked at the programs, I looked at the idea of it, and I saw that Bitcoin really cannot be matched by any other crypto out there. And because these other cryptos aren't really doing anything that Bitcoin can't do or would be able to do in the future, I don't see any reasons to even get into any other coin. Right? I mean, it's just Bitcoin and that's it. Now, on a second note of that, I've also purchased a lot of Litecoin because I believe in the developer, Charlie Lee. I think he's done a great job with, promoting his coin. He works very hard on it. It's something that I think is a possibility in the future. And again, I have my expectations on it are pretty much just, a few centimeters off the floor. But thank you very much for the $5, and I hope that answers the question on that one. Alrighty, guys, we're coming to the end of this live stream. I am going to give it one more question here, and then we're going to call it quits. All right, I respect your opinion, but I feel you're missing out on a lot of money by not doing more research into altcoins. Amber, I have probably 50 different altcoins, personally. That's how much I own. Like, literally, I probably have 50 different altcoins. And I have very little expectations of any of them, right? Including Bitcoin. Like, I have very little expectations of any of these. I am also not an investor, okay? I don't invest. It's like, I do investments, but as far as an investment channel, that's not what I'm doing here, right? What I do is I figure out economic theories. I figure out economic forces that are happening. I try to recognize those economic forces, and I try to explain those things in a way that you can now internalize so that you can make the best decisions for yourself. I could have made $1 million when I saw ETH selling for $1. Right? I actually bought some and I sold it when it got to like $10, right? And it was like I made $1,000 or something off of it. Now, it was one of the few trades that I've actually done. But again, considering where ETH is today, yeah, I missed out on hundreds of thousands, if not millions of dollars that I could have made off of it. That's all right. It's fine. I've lost many of opportunities in the past. I'm not really that concerned about it. Like, my true desire to be like incredibly wealthy is not that far from where I'm at now. Like that, I can't even see what I would do with a whole crap load of money. Like, I probably travel around a little bit and I probably figure it out, but like, I don't have this deep-rooted burning desire to have $100 million or something like that. My ultimate goal for anything that I had done was literally to pay my bills. That was it. Like, I just want to be able to pay my bills. If I am able to travel, if I'm able to, maybe acquire some material possessions that might be kind of fun, some toys or something like that, hey, that's cool. You know, I mean, that would be fun. Like, I enjoy the idea of traveling, especially to like the conferences and stuff like that. But outside of that, like, I don't know where my expectations would be for having a bunch of money. I don't know what I would do with that. Like, would it improve my life any than what I'm experiencing right now? I don't think it is. I love the path that I'm on. I love the experiences that I'm getting. I love the direction that things are going. I don't know why I would want to mess that up. Like, I don't need to earn. I mean, I would love to earn more money. I'm going to earn more money. I'm going to do things that do earn more money. But as far as like trying to push to earn the most money that I possibly can, I have better things to do. Like, I need to spend time with my boys. You know, I need to spend quality time with my wife. And that's it, man. You know, like, you know, the money is cool. You know, I mean, especially not stressing about paying bills. That is probably the best part about it. After that, it's pretty cool. It's good, right? You know, but being able to get out of debt and paying your bills is by far the best experience so far. You know? Alrighty, thank you very much for being here. Thank you. Let's see. Clamor of peace, of justice, become aware of your place in history. A new world is in the making and requires the involvement of all. The world teacher. All right. Starting my own channel, the Country Club Hillbilly. Right on. All right. Thank you, everybody, for being here. Thank you so much for the super chats. We got 325 people watching with 120 likes. Go hit that like button before we end the live stream. And the YouTube algorithm, again, will spread this around for more people to join in. And it always makes that comment section more fun to read when we have more comments being made. All right. And the only way to do that is by the algorithm spreading the video around. So thank you so much for hitting that like button. Really appreciate everybody being here. And what else? I think that's it. Links are in the description. Uneducated Economist, you let me know. Deja vu, thank you for the stars.